Good morning, everybody. Mike Vacchi, Princetontrader, here with your Wednesday morning pre-market webcast. Okay, daily chart, and I wrote down here classic head fake up to touch upper band followed by rejection. Okay, so yesterday they took it up right off the open. Took it up past the all-time high at 24.80 half, up to a new all-time at 24.88 half. As it was going up, I was telling my subscribers, I said, look, this is going to be one of two things. Either we're getting ready to go on another leg up, so get out of your shorts and you better buckle up. We were short in like the 77 quarter area. We got out of that stuff at the all-time high. We were able to get long, 82 half, and we were able to ride the rest of that move. The other thing I said was really all that's left for the bears is for this to be a classic head fake up, rejection, potentially to a band ride down. Now, we haven't done the band ride down part yet. But what happened is we got up in here into the upper Bollinger Band, and it was sitting at about 88 half and 89 at the time. Touched it, which lined up also with R3 off of the daily pivot up around 89. And we had some proprietary stuff that we follow in the room. There were some proprietary moving averages that were crossing other things, and it all kind of lined up, and we were able to find a short trade there against 89. We followed up with a short 24.80. We shorted again last night, 71 half. We've been short a few times, 64 half. I'm short 64 half right now. So the tape has started to loosen up. And that's why when I came in, when I come in and I say, look, don't burn yourselves up on a tape that doesn't want to move. Don't make your broker employee of the month by doing a bunch of trades that aren't going to go anywhere. And they're just going to generate commissions and burn little holes in your account while you take paper cuts, or you want to be like a scalper and start, doing things for a handle. It's you can get more done in half of a day of a tape that wants to move. We're working on about 28 handles since noon yesterday. You can get more done in a tape that wants to move than you can in a week or 2 weeks of a tape that doesn't want to do anything. So when you're getting all this stuff here, and these candles are deceptive. These are Globex candles. I guarantee you the RTH candles were much narrower, especially on a day like Monday. Monday was the ultimate compression day. You had a two-handle range in the morning and a two-handle range in the afternoon. It's a situation where that kind of compression really isn't sustainable. So when things loosen up, the handles come. It's in the waiting that is the most difficult. It's getting in between our ears and saying, look, the market will loosen up. Compression leads to expansion. I'm going to be patient. I'm going to do less while the market isn't going anywhere. And I'm going to wait for the market to go somewhere. Then I'm going to deploy my capital. So where does that leave us now? So head fake up. We are nicely below the daily mid band, sitting at 24.68 and change. The bears need to stay below the daily mid band all day. All day. Period. They tested it at about 3 in the morning. So let's take a look at the hourly. So here you go. You get your ramp job in the morning. This lined up with a ton. I don't have R3 on this chart, but if I did, it'd be right there. And you get the full-on rejection. There's nothing else to call this but rejection. Now, it had some help from the headlines, but what you saw after those headlines was you saw a push down in the 3 o'clock hour with a 67 half low. Then you saw it bounce to 73 quarter, which was nice because that let us get back into shorts. And then the bears go and do a lower low, lower high, lower low. Lower highs and lower lows are how the bears are going to actually take the market down. It's not going to come down like this in this big careening whatever. The key to this whole move was this low didn't get bounced all the way back up. We're not trading 82 as I sit here. We're trading 62 because this bounce was rejected. So it's all about follow through. This is the follow through section. This is the we've gone up so high we just can't do it anymore part. We have to get some relief. Here is where the rubber meets the road as far as are we going to get a pullback that means something. So what's the bears task today? lower highs, lower lows, must hold weekly pivot, must hold 68 and change, which is your daily mid band. If they can put an entire regular session in below those areas, wherever we close, it's an indication that they, being the bears, are in it not just for a day, but could be in it for the long haul. And that's how you go down and you engage lower band in the area of 53 and potentially get the full head fake up to the lower band ride. You can see the bands are tight enough to expand. I mean, we are basically 1.1 on Bollinger Bandwidth. Okay, I think it's 1.18. That is certainly enough compression to lead to a band ride. But I don't want to put the cart in front of the horse. These areas here, like daily midband, need to hold. Why? What's one of our baseline assumptions that we always have? And this is a long video because we're going over some very basic stuff. And this is the stuff that we pound on every day in the room. We don't do a lot of different things. We do a certain group of things very well. One of the things that we talk about is, what's the baseline desire of this market? Is it buy dips? Is it sell rallies? Markets that want to live between the daily mid band and the daily upper band are buy dips markets. Markets that want to live between the daily mid band and the daily lower band are sell rallies markets. So until this 68 gets converted, this is a sell rallies market. Dip, rally, sell. Rally, they're trying to sell it. I don't know if they can do a lower low, but if we test weekly pivot off of the open this morning and you get resistance there, it's absolutely a sell. Now, mind your risk. If they convert it, then you're going to get what we always get, and that can happen at any time. The bears have to survive the day. This isn't in the bag, but understand that that would be the dynamic of bear side follow through, and the destination would be lower band. All right, everybody have a good one. I will check in midday today. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.